Mohamed, I want to hear your take on this jobs report.
Morning, Betty. We have three main takeaways. First, at 115,000, we're simply not creating enough jobs. Remember, there's 12.5 million unemployed, of which 5.1 are long-term unemployed. Second, for those that have jobs, we're not growing labor income enough. Both hours and earnings were flat. And finally, as Sarah said a few minutes ago, our labor participation rate went down again, and it's now back to the 1981 levels. So for those that are looking for consumption to be the driver of growth going forward, it's simply not going to be dynamic enough. And for companies, that means they have to diversify their revenues and continue cost discipline.
Well, Dr. El-Erian, one of the things that we talk about often here is this idea that QE is either on or off the table here. Does it even matter? How important should QE be part of this discussion right now, given the fact that we're seeing this kind of momentum weakening here?
It should be, because our expectation is that if momentum continues to weaken, we will most likely get more Fed activism. That's our expectation. It's conditional. Now, the markets like that because it is a balance sheet being brought to the markets. However, we have to be careful. The Fed cannot deliver outcomes without the participation of other government entities. And so far, the other government entities remain asleep at the wheel.
Mohamed, despite the disappointing jobs report, the markets right now are holding up. They're not doing so bad. Is that telling you that everyone was expecting this, that this was already anticipated by the market?
No, it's telling me there's this notion of a put to the Fed, that people expect the Fed to come back in. That's what they've been conditioned to expect. And we saw it last year. Remember, we went through exactly the same pattern last year. We started the year strong, people got excited, and then suddenly in the second quarter, things started to weaken, and then the Fed came in with QE2 and then Operation Twist. So there's a certain expectation on the part of the market that the Federal Reserve will react.
So, Mohamed, does that mean that the equity markets have sort of lost their status and their credibility as an indicator for the economy?
No, I think we live in very unusual time. Betty, the way I like to put it is, remember, the Fed is a non-commercial player. They have different objective functions. So when they come into markets, they change the dynamics of the markets. They certainly change the correlations, and we've talked about that, but they also change behavior, and that's exactly what you're seing.
Right, and what you're also seeing is that even though we've had this huge run-up, Mohamed, since October, the markets have kind of been in a range bound. If we keep getting data like this, do you expect this market to behave this way through the end of the year? I mean, is this what we're stuck with?
No, I don't think we can stay here. I think that at some point we're going to tip one way or the other. Right now there's a tug of war. There's a tug of war between weakening macro data and company earnings that are still strong, because the companies have gotten their act together. And this is a very delicate balance, and I'm not sure how long we're going to be able to keep that balance.